Okay. This is going to be a part three. We're going to look at selling the calls here. So, if I look at Meta, and we had started buying on the previous earnings back in November of last year. So on this on this big red candle, we had started buying. Following its earnings, it was a half a standard deviation away, and just out here, it's been consolidating sideways. That we still want to buy all of this every week and continue to buy it for however many months that was. If we say November, December is 2 months, and now it's May, so call it 7 months, where we've had 7 months or 28 weeks of buying, and we should all have a pretty decent average on Meta, and averaged every Friday, it's going to be much lower than the 675 here that we had originally started buying under. That a lot of us should be closer to about $600 average, or even, $630 here, that all of our averages are relatively low. We want to ultimately try to sell Meta all of the shares that we had acquired up here at, call it $875. Now, $875 is going to be fair value at the end of the year. So we actually want to try and sell it up here somewhere at $925, or if we get a look here, somewhere around $980, $975 is where we ultimately want to sell it. When we get back above the mean, when we revert to the mean, and then we get above the mean and a half a standard deviation away above, or one full standard deviation above, is where we ultimately want to let the shares go, because if this is a great buy, then this is a great sell. We don't want to hold on to it somewhere up here at, say, 730, 740, or up here at 800 at 796. We don't want to be holding it up here, because this is great value selling. So if we bought all of this, what is that, 1, 2, 3, 4, these 4 weeks at sub 560, then we carry it all the way up here and we sell it at 800. But our average is much lower, that we can sell calls off of Meta and collect some premiums on the way up. And that way, even if it doesn't go up and it takes 28 weeks to get there, then we still collect some money out of it, whether it's 2% return or 5% return or a 10% return on the calls on the way up, that we're not just stagnant and just sitting here with shares that are consolidating sideways and not giving us any return. So now that it's moved up and our averages are so low and everybody's been able to acquire 100 shares of this, we can start selling calls. So then the pricing that I want to target for selling the call is something that I would believe is slightly out of reach, or just above something that I would be happy to at least take some return from if I had to sell the shares. Now, I don't have to sell the shares if they get there, because I can roll the call out, but if I had to, I could sell them and still feel good about the price. So for me, it's going to be that same target line that we were buying under, that 675 line, because we gapped down through here and then consolidated or dropped. This line right here is just a drop. It's just a falling knife here. But as it goes up and comes down and goes up and comes down and goes up and comes down, now it's consolidation. It's a collection of sales that happen in here that never got above this line, that I want to sell my calls up above that line, because the likelihood of this time being the breakout, where it gapped down and then fell and then came up, hit that, came down. It's created this little resistance barrier line that it doesn't really want to get above. That the probability of it hitting this and saying, oh, but this is the time I'll get through, is pretty low, just considering that it hasn't done it yet. But I'm happy to sell calls above here, so above 675, I'll sell calls up here. That way, even if it increases in value and gets up to here, it's more than likely just going to slide off and come back down, and then go up and come back down and go up and come back down until the time that it doesn't. But so long as it doesn't, I can just keep selling calls up above there. That way it never reaches it and the calls expire worthless. Now, if it does come up to this line, then I can roll the call out and I can roll it up to a much higher price. I could roll it to, that's going to be, call it 750. So then instead of 675, I would roll that call. Say we're at 675 on that particular Friday, or this week or next week or the week after that, we get to 675. Then the 675 call that I sold is going to increase in value, but it also means that the worthless call that was up here at 750 will also start gaining value. And so I can roll the call out to a future week at a 750 price and just pretend that that 750 price is now the unreachable target, because that's where it failed the last time. So the first thing I'm going to do is sell calls above 675. And then if we get up to 675, I can roll that call out to 750. It's a $75 higher price, which means that my 100 shares, if they do get up to that 750 mark, and it's threatening to sell my 100 shares, my 100 shares have already gained an additional $75 in value, which would be $7,500 gained on just that move. And then I could roll it out farther if I wanted to. If I got to 750 and whatever that call was valued at, then I could roll it out to 850 or 900 or something that I would really be happy to sell it to. And if it did get to that number, then I could let it execute and just collect all of the profits from the shares that I had collected here on the full move up to 900. So the first place that I want to look at is 675. Selling calls up here above 675 at whatever pricing makes me happy. On the METU side, it starts to look a little more like this. There's a bunch of drawn red lines on here. So if we are collecting shares and acquiring them every Friday, then our average is somewhere, call it $24. I want to sell calls up above this line, and this line right now is $32. So the 675 on Meta is the equivalent of about $32 on METU, which means that I assume all of us have an average that is under $32. So if we can sell a call that has some kind of value somewhere up above $31.50, then we feel really good about it. Now I ended up selling, I believe it was a $30 call, which is close enough. I'm not picking fights over pennies, and so if it's $31 call or a $30 call, it was close enough. And so if then we look at filling this gap here and this gap up here, then it's going to be the same premise as the Meta side, where we sell it just out of reach at $30, and then if it gets to $30, then we can roll that call, and we roll it from 30 up to 40. If we sell it above this gap, so that if it goes for the gap fill and then rolls back over, or it comes all the way up to this line that it's had resistance and trouble at before, then our call is likely to expire worthless, and we keep our shares, and we can sell another call and sell it and sell it and sell it. So if this goes up to 30, we just roll that call out to 40, up above what the previous high was here, and into this potential gap here at $43 or so. It's $42.88, but that's going to be like the target areas for where we're selling calls, is around $30-ish. Because I think it gave like $1. It gave like $1 per contract that we sold, which is $100 for each contract that you could sell. And then we just plan on the idea that it's going to continue to consolidate, but if it does go for that breakout and it pushes through this gap and pushes up and above, then we roll it up to 40, and whatever that contract value is, if at that point the $30 call is now going for $2.50 or $3 per contract, then we find the $40 call on whichever date is out in the future that somebody is offering $2.50 or $3 for the $40 contract, and we sell that one. And that might be 2 months ahead or 3 months ahead. Instead of next week or the week after that or the week after that, you might have to go out to a later date. So if that happens, then I'll find a later dated contract up in the 40 region that is offering $2.50 or $3.50, the equivalent of whatever our $30 call is selling for at that day. After the move, after it's gained some value, then we roll out to the $40 mark, and that'll be a much later dated contract out there in the 40s. So if I looked at, the chart, that's like the region that I want to try and target calls at, is going to be that $30-$32 range. It's somewhere in between here, that it's just had trouble fighting through as it dropped down. But if it decides that this is the time to go, then it gets up to that 30 range. We roll our $30 contract out to the $40 up here above this gap, and then we carry on again with the same idea that it's going to try and go for that 40, but this is not the time that it wants to get through it. The same as like here when it gapped down and then came up, didn't get through, and came back down again. We're going to pretend that resistance is something it can't get through, and so that's where we want our seller call, is up above the 40 mark. If it does get through the 40 mark, then we start selling calls for our ultimate sale somewhere in like $60 or $70 region. We just sell calls all the way up there. We plan on rolling those out towards like the end of the year for $60 or $70 on METU, and either collect the premiums for not reaching it, or if it does get there, then we just let it execute, sell our shares, and take that full move from $30 all the way up to $60 and pat ourselves on the back for making a 2x 200% gain. So that's going to be the layout for Meta. Same concept for Microsoft. We had consolidated through here, and so that breakout's kind of what I'm talking about on METU, where if it tries to go for that gap fill, then we start to make changes to the plan. So it had consolidated sideways. It had trouble getting through this resistance area, where on the earnings from last year we had that drop down, and so we started buying here. This was the January earnings, not the November earnings. The November earnings were fine. We weren't buying Microsoft back in November. We started buying it in January. So we started buying off of this gap down. And all of these prices here on the 3-week chart was super buyable for Microsoft. Like, these are great prices on Microsoft. So we just bought all of this. And everybody's average should be something lower than $430 because we had so many weeks under $430. This big red candle was the January 20th earnings here, and so everybody's average should at least be something under this price of $430, and whatever our average is, we are all green on that now. We should all technically be green on Microsoft with a really good and happy price for what we paid for it. So then if we go back to, the end of the year target is going to be something north of 516. We could look for something like 530 or 540, and new all-time highs somewhere 575 to 600. So then if we go back to the daily chart, we have gotten through and into the gap fill from that earnings drop. So now, when I was talking on the Meta side, where it's had trouble getting through, we got through here on Microsoft. So what we would be previously selling calls for now had to be rolled out. And the next target that we want to roll out to is something above this gap fill, where we got through this resistance, all of this consolidation, everything that we had buyed and whatever our average is now broken through that. And so now our next thing is going to be this complete gap fill at 480. So we want to sell calls off of Microsoft something north of 480. It's also going to end up just being the the mean line from the weekly chart. So anytime that I see the candle, up here above the gold line, that's where I kind of want to target my my calls that I'm selling, which kind of makes it anything north of 500. Right now, at this time, it's something north of 500. And so we're targeting that area as something that's not reachable. It very well could reach it, but that's kind of what I'm looking at, is that we can't get there because it's had so much trouble the last 12 weeks or so, that something north of 500 is a pretty decent call to sell, with the expectation that it's likely to expire worthless, because then I can just collect the premium. But if it does get up above 500, I'm more than happy to let the shares go if I have to, because my average is way down here. So if I took something like $390 average and sold it for 500, I'm more than happy with a 1.5% return, with a 50% return on whatever I had invested into it. I'm more than happy to take 50%. So I'm happy to have those calls execute if I had to. But the expectation is that they won't even actually get there, and I'm going to collect the premium. And I'll collect the premium here, and then on the next week and the next week as we slowly climb, because that's also the expectation, is that with the breakout here, we should slowly climb towards 500, while 500 itself isn't quite reachable. And then by the time we get there, I've collected a couple of premiums every week, and then I could look to let it go or roll out to like $560, $575 and look for it to climb to new all-time highs, where I'm ultimately going to let it go and find whatever the new loser is out of the Mag 7 to start putting those funds to work on the new lowest one that I'm going to look to climb towards the top over the next 3 months, 6 months, 9 months, or a year. So selling calls on Microsoft is going to be something north of 500. On MSFU, let's try to figure out where that's roughly going to be. There is, from November until January, this straightish line of consolidation before the drop off. So if I look at MSFU, it's going to be that same line here, that we are roughly looking at $40 on MSFU. That's the target that we are trying to sell calls off of, is that now that we've done the breakout above where all of this consolidation happened, we want to try and sell calls somewhere north of $40. So if Microsoft wants to try and push for 500, then MSU is also then in turn going to carry itself up to $40. And if we have an average down here somewhere of $24, and you told me I had to sell it at 40, I'm more than happy to do that. I'm more than happy to take what I bought for $24 and sell it for 40 and say thank you for my 60 or 70% gains. Thank you for that. Oh shucks, I have to sell my 100 shares. If it doesn't get there, those calls expire worthless, and I can then sell another one for the next month. Or if it does get there, then I can just roll it to the next month for whatever the value is that it's offering, and that roll might happen somewhere at $51 or $61. But at $61 now, we're talking about new all-time highs, and I'm looking to sell those shares completely, where I'm looking to take my $24 average and sell it for $60 and say, thank you for tripling my money or doubling my money or however much it is. No complaints here. You can have my 100 shares, and thank you for the premiums along the way. So that's going to be the plan for MSFU, is sell calls for right around $40. And if it does get there, then we'll just roll it out, and we'll roll it out to like $50 or $60. I'll see the pricing when we get there, and whatever price makes the most sense is the one that I'll end up selling calls off of for that. So that is the MSFU. And where is MSTR? We'll go to a smaller time frame here for MSTR. So same concept for MSTR, which is tied to Bitcoin. The top here at 200 is a pretty difficult range for it to try and get through. I don't know what the equivalent is on that for Bitcoin. Call it Bitcoin 85,000, where it's fighting this gap fill right here as resistance. It really doesn't want to try and go for that gap fill. It tested it a little bit here, but didn't actually fill the entire gap. That goes all the way up to here. So that'll be the next place that Bitcoin itself is trying to get through, is going to be about Bitcoin 85,000. On the MSTR side, we'll just call it 200, where MSTR is going to have difficulty breaking through that $200 range. So we want to try and sell calls somewhere north of $200. If we own shares, then we can own shares somewhere north of, or somewhere south of 170 and feel good about selling them. If we sold a call and then it executed, we would feel good about the returns just from $160 up to 200 is a $40 gain, just like a 20% return off of the investment. And I say, 20 is not bad, we'll take that. So if my average is somewhere south of 160 and I was forced to sell it for 200, really not going to complain about that. That if this climbs up and then I can sell calls and it executes, I'm more than happy to do that. So on the MSTR side, we're going to treat 200 as like the ceiling. If it ever does get through the ceiling, then we can roll those calls out if we want to a higher date, and then which case I'd have to figure out where that is on Bitcoin and determine where we would want to roll a call out to on a higher price. I want to say it's like 240, if I remember correctly. I think it's, yeah, right here. So it's like 237. If we ever did get through the 200 mark, it wants to try and get to 237 next. So that would be where we would try to roll it out to, is something north of 237, which just call it 240, and we don't have to be that picky about it. For now, it is, just kind of fighting itself along this upwards trend that we just sell calls, somewhere up here, call it 190. Calls up there are looking pretty good, and we just buy down here and then we sell up here, and we can do this weekly. And if we look at the MSTU side, it's going to be about $10 MSTU. So if anything that we buy for under $6.75 and we sold for $10, we'd feel really good about that. And then if we sold calls, any calls that we sold can just happen up here, somewhere between $8.27 and $10, and just expect that to expire worthless, especially with its volatility, that if it ever does really peak up there, it's going to get a drop to it, and a peak and a big drop and a peak and a big drop, that even if those calls ended up in the money, you can just roll them out. That if you sold a $7 call or an $8 call or a $9 call, that by the time we got to $7, $8, or $9, you can just roll it up and above to $11, $12, or $13, something that's just super high and relatively unreachable, and expect it to expire worthless when the volatility kicks in and it drops back down again. Once it drops back down, whether it's that week or the next week or the week after that, when it drops back down, those calls will go to zero, and then you can just buy them back for zero and collect however much the premium was. And you just rinse and repeat that every week. Now, I had sold calls on Friday for MSTU, and I sold the September, maybe 18th? I think it was September 18th. Yes, the September 18th, I sold the $7 calls for $1.50. So the $7, where is it? $7 is here, and then $1.50 takes us up to $8.50. So I would technically make money on the sale of MSTU shares all the way up to $8.50. If it goes to $9, then that extra 50 cents I have nothing to do with. I wouldn't gain any profits. I wouldn't gain any value from it, because I would be selling at $7 plus $1.50, that if we went to $9, I wouldn't see that extra 50 cents. But if we do go to $9, I can just roll that out to December and not really worry about it. I can roll the $7 out to like $10 or $11 or $12 on a future week or a future month for, at that point, $3 or $4, and expect that the volatility is going to knock this thing off of the $200 mark or the $10 mark and knock it down and make that $10 one expire worthless. It goes to zero, and I buy it back for $0 or 1 penny or 5 cents or something, and just collect the entire premium off of what would then be $3 or $4 per options contract. So that's what I had laid out for MSTU. On the opposite side, it has this extreme volatility to it that could take it all the way down to about $4.50. If it's following this 1.5 deviations away from the mean, down here it got to 315, then it got to 386. It's just if the worst case scenario is 1.5 deviations away from the mean, then today that's $4.50. And so I had sold an option that I bought when MSTU was $6. I sold it for $1.50 because $6 minus $1.50 is $4.50. So even on its worst day, I'm covered for $1.50 to the downside. And in my opinion, $4.50 is the maximum potential downside that MSTU has. Just simply by the chart here, that's 1.5 deviations away from the mean. And that's all that it had gotten to previously, and that's all it had gotten to back in February. That if that's its maximum move, if that's as far as it wants to be able to go, then I'm covered. $6 minus $1.50 is $4.50. And if this does go from $6 to $4.50, then that option that I had sold for $1.50 is going to decrease in value. And if it gets all the way down to 0 or 1 cent or 5 cents, I'll just buy it back. And then I just pocket that $1.50. And then in a roundabout way, it's as if I had never bought 100 shares of MSTU at $6. It's as if I had bought 100 shares of MSTU at $4.50, because I took that $150 back. It's as if I had bought MSTU for $4.50, and then I just pat myself on the back and say, congratulations, I got a super low price. And then I can carry those 100 shares or 500 shares, 1,000 shares, however many shares it is. I can carry those all the way back up and just continue to sell calls the entire way. So that's what's going on here with MSTU. Is I sold the $7 call in September for $1.50. The gains that I would get from buying it at $6 and ultimately selling it at a peak price of $8.50 is a return on investment that I'm more than happy with. While at the same time, that $1.50 minus $6 takes me to $4.50, which covers me entirely to what I believe is the potential downside. So for me, I'm super happy with that, and that's what I had did on the MSTU sale. I sold calls, and I'm covered to the downside. I'm hedged in the downwards direction as far as I think it could possibly go, where then I could just buy more shares and see it carry itself upwards and potentially see Bitcoin go to 85 or 100 or 150 or wherever it plans on going, and just sell calls along the way that cover and hedge me on the downside. If it does go to 850 before those expire, or before I'm able to sell that and just collect the money back, then I'll sell it at $8.50, or when it gets to $7, then it would sell it. I still collect the $1.50. That covers me up to $8.50, and I'm still making good money. So either way, I'm happy with that return. I'm happy on the downside, I'm happy on the upside, and I'm more than happy if it expires worthless, or it gives me the opportunity to decrease the value of that call and then buy it back for a much, much lower price, carry it back up and sell another one. Or roll it out if it does go to $7 or $8 or $9, just roll it out to a farther date. So yeah, that's what I'm looking at for selling calls on Meta, Microsoft, and MSTR. Yeah, that's it.